And then of course student loans, the ones that have to be repaid later. The federal loan program, we're down to one main federal loan program, which is the direct loan program. You might have heard some scuttlebutt in the past year or so about consolidating loan programs. What this essentially means is all of that main federal loan program money is coming right from the federal government. But you don't have to choose a lender for that federal loan money. It's all going to be done right through the school. There are two categories of that direct loan. There's a subsidized loan, which means there's no interest on that loan while the student is in school at least half time. Once the student leaves school, the current interest rate is 4.5%, and for next year it's expected to drop down to 3.4%. The unsubsidized version of that loan means there is interest building while the student is in school. The interest rate is a little bit different at 6.8%. And whether a student qualifies for subsidized or unsubsidized money is going to depend again on the results of that free application for federal student aid. We will give students as much of the subsidized or interest-free money as we possibly can based on the results of that form. A change for some of you who may have had students attending earlier, they did a couple of years ago change the rules to allow dependent students to borrow some additional money on their own. The usual limits for student loans for freshmen is $3,500 for the year, sophomores $4,500 for the year, and juniors and seniors $5,500 for a year. They can ask for an additional $2,000 beyond each of those amounts. Some schools will automatically give the students that additional $2,000, but not all schools do that. The rationale we use for not doing that is we don't want students to go into more debt than they possibly have to. But if the student asks for the money, we can do that for them as long as it fits with everything else they're getting. Some other loan options, because obviously some of those loans aren't going to cover all of your expenses. There is a loan for parents through the federal government that you can borrow. There's a credit check involved with that. Similar to that additional loan, some schools will kind of automatically put that in your financial aid package. You'll have to apply for it separately, but they'll kind of put that in there showing it's something that you may be able to receive. Other schools wait until you actually contact them and say, I want to look at that loan. They do have an option for parents to defer payment on that loan while the student is enrolled at least half time, but there is going to be interest building on that while the student is in school. The other loan option is to look for private or alternative loans. These are non-federal loans. Most of them are credit-based. Most of them will allow you to defer payment until after the student leaves school, but they're all a little bit different. The schools themselves aren't involved in that process. You're really working with an outside lender. We certify the student is really a student and enrolled and how much the student can borrow as a maximum, but you're really working with an outside lender on that. One other federal loan program that's a lot smaller, so not all students see it, is the federal Perkins loan program. There hasn't been new money added to that program in quite some time. Right now, schools are just lending out what they've collected on old loans. It's typically reserved for higher need students according to the results of the FAFSA, and it's a 5% fixed interest rate. But not all students see that, but if you see it on your award package, it's a great loan to take because it is interest-free while the student is in school at least half time.